I'm not going to go into a lot of detail about my distinguished guests' backgrounds. I will use name and title, and you can read about their bios, because I want to give a lot of time for their thoughts and their important perspective on this industry that is changing. And I've been in the industry a lot, many decades. And what I've seen, particularly of late, is this emergence of new entrants into a marketplace that was really dominated by a few. And Rita Tusher wrote an article last week in the Globe and Mail around payments, so that the fact that there are still Canadians who want checks instead of direct deposit. And one of the big barriers to that is actually the fact that they don't trust the government around the having personal financial information with them. So how do we deal with these trust issues? How do we deal with what we call data transfer? There's a difference between, what they did in London a few years ago to Lucasade bottle with an NFC device on it to do a marketing campaign around tap on, tap off in the London Tube versus something that accesses my demand account. And there's a range in there. So I think we have three fantastic. So over to you first, Julien. Can you give us your thoughts about what's happening within the future of Paytech in Canada?
Absolutely. Thanks, Carolyn. So I thought for the purposes of this discussion, I'd start by doing a bit of a level set in terms of what's happening more broadly in this payment space internationally, and then get into sort of where that leaves Canada at the moment, where we are on our journey, and what are some of the key considerations at play as Canada tries to capitalize and move in terms of payment modernization. So I think it comes as no surprise that technology-enabled financial services, or fintechs, have been behind a lot of the proliferation of digital payments, and digital payments have been growing sort of at a rapid pace for many years. The reality, though, unfortunately, is that the payments infrastructure in many jurisdictions hasn't typically been agile enough or mature enough to capitalize on the benefits of the new technology. In a lot of countries, and developed countries as well, payment structures have become sort of inefficient and inflexible due to decades of building up over legacy infrastructure. So as a result, I think in recent years, we've seen a number of international jurisdictions move to more modernize their payment system to sort of enable both faster payments, real-time settlement, and data-rich transactions. So let's take a look at a few jurisdictions really briefly, because I don't want to spend too much time on what's going on internationally and focus more on Canada, but I think it is instructive. If we take a look at the UK, the United Kingdom really has been sort of a first mover in this space, really led or sort of leading the charge was the driving force of regulation. So in the UK, we saw the faster payments service come in 2008. 12 years of volume. That is the early volume of digital payments and an upswing in fraud. They are now looking at having to update their infrastructure to ensure that it is ISO 20022 compliant. Just to give the UK, which is the entity that oversees this, is redesigning core infrastructure. At this point, they're at the sort of technology selection, technology providers selection, and we should see implementation towards real-time payment settlement and a modernized infrastructure somewhere between 2021 to 2025. Now, these initiatives have been complementary to Payment Service Directive, which I'll talk about in the EU, and the development of open banking in the UK as well, which was aimed at empowering customers to share their data with the providers of their choice. So in EU, in January 2016, the European Union published what was, I think, the most substantial payments legislation in recent years. That was the Payment Service Directive 2. PSD2 had as a focus promoting the development of innovative electronic payment systems, but also creating a level playing field for new entrants into the market. So the driving force here really was competition. So PSD2 requires that banks share customer data with third-party providers, so it rebalances sort of the power dynamics between new entrants as well as the incumbents. The deadline for adoption of PSD2 was back in January 2018, but the reality is implementation has been inconsistent amongst member countries, in part due to the fact that different member countries have been able to specify different standards, which has created interoperability challenges. amongst the EU member countries. From a real-time payments perspective, the European Union launched RT1. That's, I should say, the European Banking Association launched RT1 in 2017. And the EU Central Bank also launched TIPS, which is their target instant payment settlement service, and are working on other initiatives as well to try to facilitate cross-border payments and ubiquity across the EU. The last jurisdiction I just want to touch upon briefly is Australia. Australia's new payments platform program was launched back in 2013, and it brings together 13 financial institutions, including large banks and data aggregators, as well as the Reserve Bank. Again, here the regulator was the catalyst for change, but industry played a large part in implementing the policy objectives that government had put forward. Their sort of payment system went live, or their upgraded payment system went live back in 2018 and is ISO 20022 compliant, and we see that volumes are increasing. In Australia, fintechs have indirect access to the new payments platforms. They can directly connect, but they have to be part of the authorized deposit-taking institution. But non-FIs can, is now leading a new review that is going to look at how to bring payments and open banking together. So with that being said, what about Canada? So in our journey's market. So payment modernization is happening on a number of fronts. The first front in which it's happening is in terms of payment infrastructure itself. And so we have our payment rails, which are being upgraded. These payment rails date back now to, in some cases, back to the 80s. So they are quite legacy in terms of legacy infrastructure. So we have the large value transfer system, which is being upgraded to Links. And we also have development and negotiations around the development of a real-time rail for payments. So from a policy perspective, the government announced as well its intent to introduce a new framework legislation, which is called the Retail Payments Oversight Framework. That was announced in the past budget. The framework at a high level is meant to sort of enable two things. One, it's aimed to enable competition, sort of core payment system access to consent outside the regulatory goals. So by moving from an entity-based legislation, which is what our frameworks are currently, if you take out the Bank Act or the Insurance Act, to functional-based regulation, which is what our POF, which is sort of the short way of referring to the Retail Payments Oversight Framework, will do. Firms will now be regulated based on what activities they perform, and this framework will be aligned with the broad policy principles that the Department of Finance has, which are stability, efficiency, which is competition, utility, and integrity. It's already been announced that the Bank of Canada will be playing the oversight role as it relates to capital risk and financial risk, and they've already started to undertake consultations with the sector to try to get a better understanding, one, of the volume of PSPs that will be in the marketplace to ensure that they've got the right resources to address all those new entrants that will be applying. As a second phase that will be perhaps a bit more difficult to tackle will be market conduct. The issue there being that both federal and provincial governments have competing mandates around consumer protection, and so they will need to align on what the expectations and objectives will be of market conduct in the context of payments. Canada is also undertaking concurrently a study into the merits of open banking. This is sort of a multi-phase initiative. In the first phase, which has been completed, the government, led by an advisory committee, found that there were benefits to open banking and are now moving towards a second stage around implementation. In a Canadian context, important to note that payments has been scoped out of the open banking study. Mostly one, because payments modernization was happening already and we didn't want to muddy the waters. Two, because when you introduce payment initiation, you introduce greater fraud risk. And so those two things are happening separately, but at the same time, I think talking to stakeholders in the industry, they recognize that the value of open banking lies a lot in payment initiation and want those two things to come together sooner than later. So sort of finally, in terms of sort of considerations, I'd say it certainly is an interesting time to be in this payment space, and Canada is at an inflection point. I think this is a necessary inflection point. While Canada has traditionally been, viewed as quite innovative and progressive in the payment space, the reality is a number of other jurisdictions have already moved, and Canada is still lagging, and that affects both our ability to sort of native services.
I'm gonna pause you there for a second because I've got a ton of stuff and I want to bring in some of the other dialogue on this because I think you're going down some roads where we can get some additional conversation in here. And Ben, I want to pass it over to you to give some of your initial opening thoughts around this and tag on what Julien has said.
Yeah, absolutely. Thanks, Julien, for, I think, covering off a couple of the key points that I'll touch on. What I'll take a quick look at and comment on are really a couple of things. One is just some commentary on the opportunities for investment in paytechs in Canada, what that looks like today, and I'd say more importantly, what that looks like going forward. In terms of, and sort of the short story there is in paytechs in the Canadian marketplace. So with that, the question then becomes, well, what are some of the things that might help the situation or improve the situation? So I'll touch on those, and not surprisingly, almost all of them rely heavily on infrastructure and regulation and policy making, pro-competition, pro-innovation elements there. And then lastly, what are some of the implications of not making these changes for, most importantly, Canadian consumers and small businesses? So I think from an investment standpoint, it's it's important to set the stage or the context appropriately for paytechs. The term encompasses a whole host of different types of companies, from payment processors, POS providers, prepaid card, remittance there's no shortage, mobile wallets. There's no shortage of companies playing in this space. And I'd say from a fintech standpoint, which is we're a fintech investor, in most cases, at least within the Canadian market, payments is a part of what our investee companies do. And a great example would be Koho. Koho being the leading digital banking solution for Canadians. Payments is obviously central to their business to make the product work, but it's everything that they found around opportunities, and what we've seen so far has generally been positive and largely in line with some of the investments that we've seen grow within the fintech space in Canada more broadly. Unfortunately, as I mentioned in my initial preamble, I'd say there are certainly clouds on the horizon. And those clouds are largely forming because we as a country seem to be unable to move or make meaningful progress. But it's the ability to create an environment that lets those organizations compete and bring their solutions to market and to customers and to small businesses. That gives them choice, that gives them new ways of thinking about their business. And I'd say most importantly, it pushes the incumbents in our environment to be better. I think that's an often overlooked benefit of providing fintechs more opportunity or paytechs more opportunity, is that it actually it forces the bigger players to be better about the types of products and services, and to start to address some of the pain points that these fintechs are generally targeting with underserved customers. A great example of that is around small business, and I'd say B2B payments in the Canadian marketplace. Like, that is one area that I'd say there is still some interest in finding ways to address the very real challenges that small business owners and even large businesses have in moving money. As it relates to the ISO 20022 standard, all the costs, like all of these things. So that is something we definitely think about. In terms of what will maybe help make some of those clouds the sky brighten up, it comes down to what is the environment. What does the environment that we're creating look like?
And Ben, I want to get into that, and and I know 30 minutes is way too short a time, but I want to get Oscar's perspective. And interesting, you mentioned about cost for business. I told somebody the other day that there were only 9,800 some billers in Canada, and they went, "What?" But there are millions of small businesses. I said, yep, but there are only 9,800 plus registered billers in this country. Yep. Oscar, over to you. I want your perspective. Get in here, and then I'm going to do some rapid fire questions.
Sure. I'm just going to make this short and sweet. I think between Julien and Ben, they've touched upon a lot of the things I was planning to. And so I'm going to take a little bit of the consumer lens on this one, or the individual or the Canadian lens on this one, just to help round this out. And so when I was actually thinking about Future of Paytech, I was actually preparing my opening remarks, and I'll tell a little story. I was working right beside my son. Right? My son's got his tablet, and he's flipping around watching YouTube Kids. And the interesting piece is it reminded me of a memory back in the day where he was 2 years old, and he learned before he could read or say a full sentence, he learned how to tap the bottom right corner, because that provided him access or expedient viewing capability to whatever show it was. Skip 5 seconds, 10 seconds, or 30 seconds of his life before he even knew the word skip ad, or let alone what a commercial was. And so when I think about that experience, I think about all of our experiences as people, as individuals. I actually think about like what has it done to us over the last few decades. And so I think about, we've all been subject to fatigue, right? A certain element of fatigue, whether it's ad fatigue for my son, and frankly, all of us, we skip ads on YouTube or whatever streaming services we have. And it also extends to terms and conditions fatigue, right? Where we're skipping through screens and screens of legalese only to check those check boxes and say, oh, yep, I submit, I accept, not knowing even know what those check boxes are, right? And frankly, some of them are optional. And then it extends to, over the last decade, breach fatigue, right? Because our data is being stored sometimes without our consent, without even our knowledge, from last week or even 7 years ago, right? And those systems are being hacked, and our personal details being leaked or sold to the highest bidder. And so when I actually, don't get me wrong, like I love technology. I'm a big fan of its efficiency and effectiveness and how it connects us all digitally in these times. But it's also an enabler that has made us desensitized to all these negative interactions that we'd normally be very irate over, but we're not. And so what does that mean ultimately? I think it's all adding up, fatigue, right? Especially around our privacy and security, and everything we do is being tracked, monitored, utilized, monetized, right? Whether it's the data itself or the metadata. And then if you actually look at some of the surveys being done, the Office of the Privacy Commissioner of Canada surveyed, and 92% of those Canadians had expressed concerns around their online privacy. And that's a staggering, but not surprising number. And so last point, every time I'm asked about, what's the future of Paytech, what's the future of financial services, I actually think these industries are good in isolation, yes, but the lines are actually being blurred. Industries are collapsing, they're condensing, they're coalescing, some form of the above. And I actually think about what's the future of people? What's the future of Canadians? And when I talk about Canadians, obviously it includes those millions of small businesses out there, and how there's an increasing focus and sensitivity around privacy, security, data sharing, and how actually paramount trust is in this day and age and for the future. And so I'll probably stop there because I know there's a bunch of conversations to have.
Yeah, no, it's these are all of the issues. And if I go back to my opening comments around technology, consumer preference, and regulators, this is what it is. And what are we willing to accept? So I'm going to throw a first question out there. Like, we do have a handful of financial institutions that really dominate the Canadian marketplace. They really do. Is that how are they influencing the market? Are they open to pay tech coming in? Do they create, from a regulatory standpoint, from an investment standpoint, from a partner like Interac? Are there any issues there? What are the opportunities? What are the barriers? Julien, I'll start with you.
Great. No, thanks. So absolutely. I think the fact that there's an oligopoly, especially sort of in the banking sector, has a direct bearing in terms of sort of the ability of the sector to move quickly and efficiently in terms of innovation. And I think, the regulatory structure that we have in place sort of is not necessarily fostering competition either in the market. If you take a look at our federal financial sector, right, their shining light is safety and stability. They don't have competition in their mandates, and what they know is, how to impose, capital requirements or capital buffers, but how to determine, what impact a player will have on the competitive dynamics of the marketplace. that they don't. And not to say that they're not in favor of competition, but the reality is, since the financial crisis, we continue to pat ourselves on the back of having done such a good job. And the reality is, for regulators, it's easier to oversee a handful of players and have a direct line of sight in terms of what they're doing than have all these other players as well coming into the market. So I think the competitive incentives haven't traditionally been there for sort of a rapid move towards innovation. I think, as well, that advocacy around fintechs and the value of paytechs as well has been a bit slower to get organized. I think there's a lot of great recent initiatives, whether that's the Paytechs of Canada doing more advocacy and other fintech groups as well playing a role. The Senate has taken on sort of a leading voice as of late, with Senator Deakin and Senator Weston really calling on the government to sort of move on supporting innovation. But the reality is there's been a lack of political leadership in this area that sort of said, yes, recognize the benefits of innovation. And I think, the efforts that are underway need to continue to happen if we're going to deliver on the value of.
So can I just put on to that to Ben? Ben, are the investors investing into the Paytech, supporting Paytech, are they hearing that? Are they seeing that? Are they seeing obstacles? Are they seeing that there's an appetite in Canada to drive a different industry here?
I'm not sure anyone is seeing that at this point in time.
That's why I asked the question.
So, Julien touched on, obviously our market dynamics create an environment naturally that is not, that is fostering competition within a small group of organizations, not more broadly as has been done elsewhere. And the reality is you cannot rely on incumbents generally to create a competitive environment. I use this example all the time with open banking. In what world does it make sense for a profit-seeking institution to voluntarily open up their data to third parties? And I say that somewhat facetiously, given the world is going down the path of more open data and people taking greater ownership, and some of the comments Oscar made are very appropriate. But we can't rely on the market to solve all of these problems. There's absolutely opportunities for more collaboration, and this is actually an area that I really push on. The organizations that we work with that are in our portfolio, and more broadly within the Canadian fintech ecosystem. I think historically and understandably, there's been the big bang versus everyone else dynamic. Now, and Interac gets brought into this to some degree, given just the way that they're, the governance of their organization, the ownership of their organization. If we can find more ways to create a more competitive environment through greater collaboration, through access to more of the utility type services that we've already built, the infrastructure that we've already built in this country, we should be finding those opportunities. And increasingly, I want us to find those. I say that though, knowing that we will need a more concerted effort from the regulators and the policymakers if we really want to engage consumers in a bigger way. If we want to make financial services more transparent, we need that regulatory policy push in addition to.
Okay, so I'm going to pass that to good baton to Oscar. What are you guys doing? You're governed by horizontal competitors. They made a decision to bring you back into the fold instead of let you go independent. What's going on in Interac to allow for that? Exactly what Ben's talking about. Who are you collaborating with? Are you collaborating?
Yeah, and absolutely, collaboration is a major focus for us in partnership. And how do we actually extend and provide greater access to everybody and ultimately to Canadians? It's a big conversation topic, whether it's directly in payments or digital ID or even in open banking. And so it's interesting as we think about this market dynamic structure that's an oligopoly, and we've got many of those in different industries, right? Banks and financial services, telcos, retailers, and the list goes on. And so when I actually think about those traditional dynamics, and I call them traditional for a reason, I actually think about, I'm like, man, that's because, and typically those incumbents are the market makers themselves, which to Ben and Julien's point, don't necessarily have the impetus, right, to do certain things, right? And so, but when I think about the industry lines blurring, right, and the sectors all coalescing into one, I actually think that's a game changer. The rules of the game, right, around like an oligopolistic structure, right, end up becoming a situation where either incumbent or new entrants, because of those coalesced industry sets, can actually become net new market makers, right? Market makers, whether you're stitching in the glue or whether you're creating a brand spanking new value proposition, whatever it may be, right? And I think that difference in dynamics and that coalescence will actually bring about pretty significant change for those that adopt it. It actually helps evolve the way we think about products and we think about platforms and diversification and stacked offerings, all while leveraging obviously what you do best in your wheelhouse. But those are going to be fundamental dynamics that will change the game for any industry, let alone financial services.
Cool. I think I'm loving this conversation. I wish we had another 30 minutes, another hour. I'm going to get some one-word answers from you from questions because I'm running out of time shortly. Oddly enough, like I said, time's flying. What is the biggest barrier to a successful fintech paytech industry in Canada today? One word. What's the biggest barrier? Julien.
I'd say regulatory and scale.
Regulatory and scale. Ben.
Access.
Oscar.
Access with multiple tiers to that.
This is interesting, but it's something you started off, Julien, talking about, where other jurisdictions have talked about this, and how do you break down what Ben talked about around incumbents in the marketplace, and how do you say incumbents, you can't control the marketplace anymore, and Interac is thinking about it. If I give you each 30 seconds to wrap up your thoughts around Paytech in Canada, best things to do for it. We talked about barriers. What's the best thing to do, Julien?
So I think is sort of the continuing advocacy efforts that are happening in the marketplace are good, and I think they need to continue to grow. Otherwise, for the sector needs to continue its advocacy efforts and trying to collaborate together to move.
Yeah, I wrote a scenarios document recently, and it's we're talking months and into still don't know. It's uncertain. Ben, your thoughts?
So, I come back to Oscar started to really go into the consumer piece. And I think fundamentally that's what this is about. So if we want a financial services marketplace, payments and everything else that goes along with it, that, has the appropriate balance between the consumer interest and the financial institution's interest. We need to find ways to make this easier for consumers and help them make the right decisions. And so, if nothing else, that should be the motivation. And I think we can look at our past and say that has not delivered on what we should be doing for Canadians. And small businesses, again, included in that. So let's put in place the infrastructure that will help Canadians succeed and that will address the very real pain points that are in place today. And I think that is a competition, innovation type focus.
Excellent. And your thoughts, Oscar? Final thoughts?
Yeah, and final thoughts. We're talking about Canada compared to the rest of the world, and on the global innovation index, we're 17th place, right? And so we really have an opportunity to crank that, especially given all of these weird times. And so I do think here in Canada we've got some great organizations, both incumbents and new entrants, fintechs, and all of the like. And across those, they're aligned that we can actually work together and increase collaboration. So no longer one-on-one and no longer trying to get ubiquity and scale right away. It's somewhere in between. And so I would call that let's form a minimum viable ecosystem, right? A few parties that are equally aligned on what the target goal is for whatever initiative is, be it payment initiation, whether it's data sharing, digital ID, and let's actually move that market forward with that MVE to ultimately provide Canadians with that choice, flexibility, and without sacrificing security at the end of the day.
Yeah, I think, you know what, we're almost out of time, but I want to say is I think there's a real alignment of thought, and I just started out with a thing around technology, consumers, and regulation. I'm going to add collaboration and cooperation now as a fourth element to making Paytech successful in Canada. And I really want to thank Julien, Ben, and Oscar for your time today. It's been a phenomenal discussion. I wish we had more time. But maybe we can do this again at a different date and further it. So I hope this gives people some perspective on Paytech in Canada, what's going on, and what we all need to do to make sure that this is a successful addition to our marketplace. Thanks, guys.